Good morning. Welcome to Options Tender. It's Friday. Welcome, everybody. It's November 1st, 2024. New month. Maybe some, what do they call it? Window dressing or new money coming in, whatever. We're doing a video on SPY through multiple time frames, and we're going to go around the horn on 65. So with the election coming so close and FOMC being on Thursday next week, election on Tuesday, results Wednesday. So our time frame is Wednesday and Thursday. We'll keep an eye on that. And I don't think the market's going to do much more until then. And so that leads me to believe that I needed to, and I did, push out a lot of my trades to a later date. So we did a members video with a lot more detail in that. If you're interested, it's I think it's $3 a month for YouTube individual analysis. We're doing this intraday about 11:50 a.m. Eastern Standard Time. If you're interested in getting these videos intraday, consider becoming a 99-cent YouTube supporter. Appreciate you, and let's go. We have SPY on 2000 top, 21 top, 24 top. We're getting a topping candle. I think that's going to follow through. In the meantime, we have some work to do the next coming few trading days. So I think next week will be a continuation to the downside. We're not going to spend a lot of time on the higher time frames. On the weekly, looking at a rejection, and still that 8 EMA is giving us the push to the upside, the reaction today, and I think that will continue to push a little bit more, not making new highs. I don't suspect there's a new high. And I'm not going to go through. I think the top is in. I think after this point, we can look at the end of December being some sort of, we have 1229 being some sort of low or high. We don't have much going on time relationship wise until the end of December. So we'll see where we're at that point. Major spots here, the 561, I thought we were gonna go straight down to there. I don't think that's the case anymore. It's still possible. We weren't far from it, but I think that the market is setting up right now for another move. And I'll show you on the lower time frames how I think this is playing out now that we have some more information. Now, it all depends on what happens between basically today and tomorrow that will show its colors. But we have a big point here at 562, a breakdown from there, and that says, hey, we had a fake break. We broke out and we're breaking down from this ascending triangle. Then we have some levels down here, the former 127 target. So that will be a big zone on the weekly. You get down from here, it's likely we'll go straight down to there. Okay, and maybe get a bounce or something like that. So we'll keep watching throughout the weeks. We have plenty of time to go through that. But this next move to the downside should be pretty relentless, and I'll show you why. All right, on the traditional technical analysis, we had that bearish rising wedge, broke down from it, formed a new wedge. At this point, we broke down from that. Okay, so we already had our second sell signal. We had two wedges that broke down, and that large wedge, this wedge, and we had a secondary wedge that broke down. We back tested up here. Okay, so that the high is in my opinion, and then we're holding on to the 50 moving average. So that's why we're getting our bounce today, and I think that will lead to just a little bit more upside. But we could continue. You have to be really careful, especially when the downtrend continues. The 20 moving average and this 8 EMA are going to cause a little havoc. All right. And so we might intraday get above it, but I think that might be going into like Tuesday. Okay. So that's just a guess. I'm not hedging at this point. I don't feel the need to. I think we've started our downtrend. I think all the probabilities to the downside now. Okay. So as price goes up, I will be adding on to my positions. Let's go to this board. So this point, I was looking for price to go down to a natural point here at, and it still could into like Monday if we want to go down a little bit more and then get our bounce into the election. But I think we're already starting off the 50. So in my opinion, and I have a basis for this. So we showed the tech stocks. That was a big reason in the members video, but I'll show you on QQQ why I think this is more likely the case now. And I think we might close that gap going into 11.5 is a good daily spot here. That's for the election. And then 11.8, there's a little cluster there. So we'll look into this time window for something to happen. Maybe we have a top going into Tuesday 11.5, and then overnight with the elections we have maybe a gap down. Let's go to 65. Okay, this is how I'm going to talk you through it now. So we had our wedge. We broke down from the initial wedge, and then the secondary wedge we broke down from. Held on to it until some of these tech earnings. And so now we have a downtrend. At an extreme, price may go up to here, up to about 582. That's possible into election day. That's Tuesday. So I do think this could be a pretty deep retracement here and reject off of this downtrend line. That's possible. It doesn't have to. We have lower levels. It could reject from right here, you guys. But looking at some of these, like yesterday, we were talking about being oversold. You know, we could get a crossover going into Tuesday, back test the zero line on the MACD, and then head much lower. We have a lot of room to the downside. We could reject right here, okay? So I don't want to play this bounce. It's just not worth it. It's only worth a few points at maximum 6 points. Okay, I can handle 6 points. So after our breakdown, if our high is in, we're just going to continue, and the next move is going to be pretty large. So we're oversold, and then right in the last second of the closing, right before the closing bell, we had a positive divergence right there. All right, that was created by that last little move on the 65 lower. And we got to the options expected move. And so now that we're down here to the options expected move, I don't suspect that we'll get too much higher today, being Friday, possibly to where we started. That's a possibility. So the slow stoke is already getting to the kind of sold area. I do think this is going to have a little uptrend here. Okay, so how's this going to look? In my opinion, I started to do it for you. Okay, so in the white, here's what happens if we reject from this 200 moving average and the 382. Okay, this 382, because this is now, I don't think this was a 1-2, and this was a 3-wave move, right? So we're pushing off of it. So something's wrong. It looks incomplete. So there's two things that could happen. This being a 1, this is a leading diagonal as a 1, 2, 3, and we're getting rejection off this 382 from this high right here, being the top of 2. So that will be our line in the sand. We get above the 574, then we're going to probably head up to 579 to 582 zone. All right, and that's going into 11. You have 11.6 here. So that kind of coincides with the 11.5 on the daily time frame. So that will be our zone. Doesn't have to get up to the 582, but you see where I get that number? That's also the downtrend area. Okay, so that, I think that we have our 1-2 in a much more shallow spot here, and that the 3 is down here. Elliott wave is all speculation, you guys. It just gives me structure to look at things, okay? And then this 5 was a larger wave, so you have kind of an expanding move here. And you could draw this out as an expanded wedge. So that would say that our wave 1 in the yellow is now in. And I think that's more likely situation. And then going into the election and FOMC, we're going to continue to bounce. I think this is going to be the A wave today. We might get above it, not sure. Maybe a move down today or Monday into a B. And then we have our C going into, we'll put it way up here because we don't know if we'll get to the 786 or whatnot. And that will be wave 2. Okay, so I think this is going to play out and take some time. And then going into the election and into FOMC, then we have a nice large move, because those are huge catalysts, large move to the downside, okay? And so now we can measure this from the top all the way to the bottom of this entire move, if it's done. And we can measure it. It'd be more conservative to go higher up here to 786, because if we reject off the 72, then you'll have a lower target at 550. But let's just be more conservative. So we have to adjust that whenever we get our top in. So at this point, we're looking at about the 553 to be our wave 3. And maybe that goes into the cluster into 11.9. And on the daily, remember that was a 11.11 cluster. So it could be 9, 11.10, or even 11.11. So I think that goes into the weekend. I think 11.11 might be the, I'll have to check, but might be the on Monday. So we'll see. Not important yet, but I think that will be our large move to the downside for wave 3. And then we get some sort of bounce for wave 4. And wave 4 could be sharp because we have this, we'll see. We'll see what this correction does first. The rule of alternation, if this is kind of wasting time and it's an A, B, C, maybe it's a flat or something like that. Maybe we get a lower and then move up. We'll just have to pay attention. If it takes time, then wave 4 will probably be smaller, maybe a little triangle, or maybe just a quick zigzag, and then move lower. So this will be our target, 553. So the members, that's what I was talking about. That's how I make my targets. I'm going to give it some time past 9/11 or 11/11, and further out. I do have much further dated puts, but that's for primary swings. Okay, this is kind of playing the shorter term. All right, so we're not going to hedge into this move. I don't think this move is going to be devastating at all. You just have to watch the premium on your near dated options. Okay, QQQ. On the Qs, same thing. ABC, we're done here. And this is what's giving me the clue that the move is in. It just appears that this is a nice impulse wave. But we have to keep in mind maybe this 1, 2 that's in here. This is a wave 3, and then wave 4 to the 382. So that's why I left this on here. This will be the line in the sand. We get above 490, and then this is going to retrace further, potentially all the way up to the 786 where the gap closes. And again, this is already a sell signal. We broke down, we gapped underneath this wedge, broke down, and all this is right now, whether we go up a little higher today or not, I think we'll get maybe a pullback into support and then a secondary move up here into election. And so if that brings us all the way to the 495 or 496, maybe even a wick through on up to election, or even if it takes longer to do this, all the way up here into FOMC, then you have that 498. Okay, and that'd be the 786. So don't let your options get just killed by time. I don't think this is worth playing. I'm looking for this next move to the downside. And do you see where that target was? This is assuming that the move is done and that we get a deeper retracement. All right. And that will be adjusted if we reject off the 62% retracement. We'll adjust it. But for now, we'll be conservative. and we're looking for the wave 3 to continue lower here. And you know, you guys, the next move, it shouldn't take but a day or two, probably a pretty big move to the downside from those catalysts that we have coming up are pretty massive. So they should be a really volatile move. Okay, if this is all done in one day, then maybe FOMC we get a bounce for wave 4 and then continue down. So again, I'll do these videos often, so make sure you hit that notification button. Each day we'll give you some updates. IWM, not so important to us because this could just play as a balancer for whatever the market needs to do. So if this continues lower while tech kind of pulls the market up, you know, it doesn't really matter. This could just be back testing here. We're not going to, I have some TZAs out further, so I think eventually this is going to move down, but I'm still kind of sticking to the point where the rates are just topping out. You know, we said this would happen. We got a rejection first. But once rates start to really fall, which you saw job numbers are pretty lame, whatever, and rates are going up, that's not really how it works. So this is, to me, is a fake move, and we'll start moving lower. We have divergences happening, and we're just waiting for a move into likely the election. And by the way, it doesn't matter who wins. The market's going down either way initially. So that's that whole political, they have people trading. I saw on Robinhood and people trading the election. I'm like, oh my gosh. And my oldest is he's a junior, and he has economics class, and he's trading stocks right now. And you know, we didn't trade the election. He said some of the kids are just putting in a lot of their money into the. I'm like, what are they teaching these kids? Oh my Lord. They're trading the election with some of their money, their virtual money that they have. Yikes. Okay, so sorry about the hold up there. We have SMH. So again, just like I think SMH is a little bit more bearish. I think the 1-2 is in, and we're getting another 1-2, and then we continue lower for the 222 down here. So what does that say for the VIX? VIX is getting a little bit, not crushed necessarily, but it's pulling back. I think it's likely that we'll retest the breakout here, which is the 20. Had so many hits off of it, 20, 20, 20, 20, and then finally broke out from it. I think that all this is doing is backtesting, just like the market's backtesting to the upside. So I think we'll close this gap here around 20. Makes sense to me. If this starts to make new highs beforehand, I think the market's already heading lower, rejecting off of the 8 EMA and the 20. Okay, but I think they might pop above the 8 EMA and the 20. So looking at the daily time frame on this one, you'll kind of see that in this case, all we're doing is, again, coming down to the breakout. It's a little triangle there, ascending triangle. Breakout spot was about 20, and the 8 EMA and the 20 moving average is right there at the breakout. So I think it's likely that we get a little bit lower here. Okay. All right, that's what I got for you. You guys, good luck trading. Don't forget to like the video, and we'll see you next time.